Good morning everyone. Today we have the on-chain metrics analysis from Will Clemente for the past week. As hodlers and miners, this will help you separate the signal from the noise. I suggest you follow Will on Twitter or sign up to the newsletter. His details can be found in the description. Just a quick disclaimer, this video is for informational purposes only. You should not construe this as legal, tax or investment advice. Let's get into Will's analysis. Hope all is well and you had a great week. It's been another week of ranging for Bitcoin, with price trading in this current $30,000 to $40,000 range for over 6 weeks now. Let's dive into this week's on-chain overview. Here are some key takeaways from the week. Bitcoin continues to build up a big base of capital between $32,000 and $40,000. Over 15% of Bitcoin's money supply now moves in this range. Mean daily hash rate continues to trend down, reaching the lowest it has been since 2019. At one point, more than 23-minute block intervals were seen, which slowed issuance of new Bitcoin. A difficulty adjustment is coming any day now. Miners selling over the last month. This is assumed to be part of the Chinese miner migration. Younger coins continue to sell, including the largest day of net losses in Bitcoin's history in US dollar terms. Still no major uptick in new whales. Retail is adding aggressively. Reaccumulation continues. Exchange flows are sideways, bullish. Stablecoins continue to slowly flow back in. New users coming on chain is back over 36,000 per day. Given the amount of time we've spent in this range, there is now a clear third zone of on-chain volume for this bull market. Over 15% of Bitcoin's money supply is now in this current range. Lately, one of the most talked about phenomena regarding Bitcoin has been the dramatic drop in hash rate. Hash rate continues to trend down with a very small bounce on Wednesday the 28th. On the 27th, it's dropped to the lowest levels we've seen since 2019. Despite some impacts, the network continues to function as it always has. Let's look at some of the impacts that the drop in hash rate has had on the Bitcoin protocol. Mean block intervals has reached historically high levels. At one point this week, mean block interval reached 23 minutes, compared to the typical 10 minutes. This means that the highly anticipated difficulty adjustment will take a bit longer than usual. Due to the slow block interval, issuance has also slowed, meaning less Bitcoin is being issued to the miners. This has reached a low of 362 Bitcoin on Sunday. The expected issuance is 900 Bitcoin per day. This of course will go back to normal after the difficulty readjustment. Because of slow issuance and lower prices, the Puell Multiple has dipped into the buy zone. The daily issuance of BTC divided by the 365 DMA of issuance in USD terms. Every instance of the Puell Multiple dipping into this zone has served as an excellent time to accumulate Bitcoin. Prior instances include the 2012 bear market low, the 2015 bear market low, the 2018 bear market low, and the March 2020 crash. One last note on the miners. It's been widely spread that miners have played a big role in the price decline over the last few weeks, as supposedly miners needed to sell Bitcoin in order to migrate out of China. However, according to Glassnode, miners have reduced their holdings by only 5,269 Bitcoin since May. Most of the selling came at the beginning of June, and this is nothing that the Bitcoin market cannot easily absorb. Most selling continues to come from short-term holders, including a big capitulation event this week from the younger entities. Looking at short-term holder Sopra, these entities sold at massive losses on Friday the 25th. Remember, Sopra measures the profit that the coin carries. This drop in STH Sopra rivals other major drawdowns in Bitcoin's history, only falling behind two other drops, the 2018 bear market and March 2020. In raw dollar terms, this was the largest day of realized losses in Bitcoin's history, outpacing the previous record in May. In total, 4.4 billion in losses were realized. It was also said that retail is to blame for the recent selling, but looking at the data, this is not the case. Retail continues to aggressively add to their holdings. While balances held by these entities are small, they always trend up. It has seen a sharper than normal spike. Keep in mind, I can only see the on-chain data. I can't see inter-exchange flows. This is the breakdown of buy-sell behavior of different cohorts from early June 5th to July 1st. Retail, 4,369 Bitcoin. Holders with 1 to 10 Bitcoin, plus 14,942. Holders with 10 to 100 Bitcoin, plus 50,705. Holders with 100 to 1000 Bitcoin minus 17,374. Holders with 1000 to 10,000 Bitcoin minus 27,037. So in a general sense, it appears the smaller entities have been buying heavily, while larger entities have been trimming their holdings. Looking at the age of the coins sold, it appears in combination with the cohort data, young whales have done the most selling over the last month. Let's hone in on these whales, which of course is the cohort that moves the market the most. The number of new whales have continued to trend down. This is based on metrics such as coin days destroyed, dormancy, ASOL and liveliness. With that being said, we can conclude that the vast majority of this big W-shaped recovery in new users are retail investors. Given that the number of whales are trending down, retail is buying and whales are selling. It will be fascinating to know how much of this upward move is coming from Latin American countries. The network is back about 34,000 new users coming on-chain a day. Remember, this is not addresses. We use heuristics to identify entities on the blockchain. With regards to reaccumulation, illiquid supply change is still in the green and illiquid supply ratio continues to trend up. These indicators both suggest the same concept. Bitcoin supply continues to flow into illiquid entities. I think a good way to analogize what is going on is the following. A lot of liquid was spilled on the counter. The market is now slowly adding paper towels. The speed of the paper towels being added is represented by the slope of the liquid supply ratio. But as long as there's no more spills, eventually the liquid supply will be absorbed by strong hands. With this being said, as we talked about since we initially began ranging over a month ago, we will range until the reaccumulation is complete. Exchange flows is also now looking sideways but still bullish, which is a change in trend from what we saw leading up to May's big price drawdown. This also shows accumulation. Lastly, we had the stable supply ratio oscillator created by Will. This is showing stable coins continue to slowly flow back in from the sidelines. This recovery resembles other large Bitcoin price drops since stable coins were first introduced, including late 2018, late 2019, March 2020, and September 2020. Another sign of recovery. Looking forward to touching base next week, guys. Hope you have a great week as always. Key takeaways are at the top of the newsletter as usual. That is it for today's analysis. Hopefully you found this helpful and you can find Will's details in the description.